Good morning, everybody. It is Thursday, the 21st of December, and if this is your first time with us, if you got a hold of, if you got an email from Forex Lens, we're also going to be reviewing today some cryptocurrencies. I also trade cryptocurrencies. In fact, they probably account for anywhere between 30 to 40% of my aggregate trade volume, and that amount is increasing as we go. I haven't really touched futures lately. It's just kind of excuse me. Here we go. All right, just check the message that popped up. Okay, uh, Forex and cryptocurrencies are easily the most open markets as far as the time that they're open, and cryptocurrencies themselves are open every single day. They never close. Are there drawbacks to that? Sure. If you are an active trader, you don't want to have to worry about your positions every day of the week. You kind of like having a weekend off every once in a while, but sometimes if you're really kind of especially I think in the beginning when people get into trading, they wished markets were open every single day. So we'll just kind of keep looking at how that goes with 24-hour, 7-day week opens. Let's take a look at our currency pairs quick. The Forex market. Again, we're going to have fewer and fewer great trading days. Closer we get to Christmas, volume is going to be slower. And then after Christmas into New Year's, that sometimes until after the first week of New Year's, will we see some kind of return to normalcy. Yesterday, let's look at the euro quick here. Yesterday, I was pointing out that we were in these really oversold conditions, or rather, that was on Tuesday. The euro just really kind of shot up, and one thing I noticed I had on another chart of mine, but not on here, was that, okay, not that. Oh, stop messing with me. Here we go. Is that we have this trend line, this longer trend line from these two peaks back in the 27th and the 30th of November. And we really shot outside of that this week. And we pretty much got stopped at the 19 handle, kind of touched above it, but we've been trading down ever since. This was a really kind of nasty, horrible trading range. And then just overnight, we started to have a little bit of a breakdown. But, this trend line is acting right now as some support. So is this level at 1851. We'll see how price responds to this. Yesterday the House passed they have to vote on it a second time on tax reform, and the president is going to sign that before Christmas. And that there was not a lot of response to that in the market. Some people were saying that's priced in. Although if you listen to some of the big investing experts, they say that that is not all priced in, and that at least in U.S. equities, there's another 15% higher that the market has not valued in for the tax reform, because now it's a certainty. I guess nothing's for certain yet. It still has to be signed, but that's pretty much a done deal, about as done deal as you can get. So on our euro trade, we're kind of in neutral as far as the RSI is right now. But if we look at longer time frames, like the 4 hour, we are really overbought here. And in fact, we have a pretty good candlestick here that'll close in about a half hour. If we can be lower than the entire range of the last 4 hours, that'd be pretty bearish, and that would hopefully be considered like a false breakout. If you look at our Bollinger Bands here, again, we are well above the upper volatility band and in overbought conditions, which does signify a pullback. If we look on a higher time frame, the 8 hour, it's not as extreme in the RSI here, but it is on the composite index. So keep an eye on those. And I do not know why TradingView scales these to be under this trend line now. I'm not entirely sure why it does that, but we have to. The area that we want to look for here is a break below the trend line and the 1850 area, the 1851 area rather, and then a break at this angle, because we did shoot above this angle, and the law of angle says that we're supposed to, when we break it, we're supposed to test the next one, which is clear up, beyond 120. Excuse me. So we'll have to see how that pans out for the day or the week, rest of the week rather, one more day. I really don't have a lot of trade scenarios here at all. I'm not looking to trade really any Forex until maybe after Christmas, see what the price action's like. But otherwise, I just have learned for me that this is not a time period that I uh, like to trade. If you are looking to trade, if I was looking to trade, I would wait until if this was a bounce, I want to return to the 119 area, and I mean, I wouldn't feel bad going along at 1.1875, and then short at 1.19. All right. Looking farther here, the dollar yen pair. We did reach back into this old trend line, and we are above the 1335 handle, which had been acting as a area of resistance previously. Or area of support that turned into resistance, but it really wasn't any resistance this time. We are above these two angles, so that is a good sign. Those should act as support, but we'll see. We do have if there's a trend line here that's not on, I didn't put, but we're trading slightly below it. The candlestick hasn't closed yet. We'll see how well that is respected. Again, it is. If you notice, something that's not very common is that we have the euro moving up and the dollar yen moving up at the same time. Usually, that is not a common occurrence. All right. See what else there is. Neglected to draw that there is a trend line here as well that seems to be respected depending on how you want to view your trend lines. There's a few of them. We could say we're broken on one. We could say we're still in structure on a lower swing. No, that's just going to vary on how you want to draw those. So the euro pound, had a short bias in for the euro pound yesterday, which did trade down, which was nice. And then we found support. Not only is this the 2-3 area in the Fibonacci, but the 2-3, or I mean it's a strong harmonic zone. And it looks like we'll want to keep pushing higher on this. It doesn't have any signs that it wants to break down, so there's no reason why you wouldn't anticipate this to go up to the 88, 98 and blow through it. All right, and also the pound yen, these other yen pairs, pound yen's going down, the euro yen going down, Aussie yen going up. We looked at this earlier in the week and talked about it banking around in here, which it has. It's respected that trend line. It's just kind of shot up. Looking back at the gold trade, not a lot of movement really. Yesterday was talking about look what happens when we have a break of this trend line, or this angle here that it had been respecting. The theory, the law of angles states that once we go below it or above it, once we break it and we've closed, we should anticipate price moving to test the next angle, which is a ways down there, but it would be this angle that it would test. All right. So keep that in mind. This could just be a false breakout, but we are fairly neutral in our RSI and our composite index. We're not seeing anything that would indicate a change in direction here. Looking at the volume, we do have a lot of buying volume here. A lot of buying volume on this hourly, which closes in 18 minutes. So we'll see. This is pretty engulfing right here, but we'll see what the price action does. If this ends up not being a real move up, and we close kind of neutral here or below this close, it could be a good run to the downside. Okay. Yes, I mean that's just a lot of the Forex stuff is not a really great trade right now. Looking at the euro. Let's go to the 15-minute chart, see what's happening here. Quite a bit of buying volume on this current candlestick, which closes in 2 minutes. I guess we'll kind of look to see what happens. Take a little sip of coffee. That volume bar here is higher than all of them except for since 2 in the morning, but it may exceed that in the next 2 minutes. And they'll kind of give us a good idea of where where this goes. It's above this. Is this that shorter term one? No, it is above the longer extremes of the trend line, but it is below the shortest. Shorter? Not sure if that's the right way to say it. Looks kind of like it's just kind of parking there for a second. Sometimes the last 30 seconds are big movers. There's an old stock saying that in regular stocks that say amateurs trade the open, experts trade the close. That kind of translates into a lot of markets where you'll see longer time frame candlesticks. I don't know if you consider 1 hour, 4 hour, 8 hour long term, but for day trading, I think it is. But if you look at the 1 hour, whatever, 1, 2, 4, 6, 8 hour candlesticks, 12-hour candlesticks, a lot of times you'll notice that within the last few minutes of those closing is where you see a lot of participation in the movement of that candlestick. So it looks like we will surpass the volume. That's the most volume traded since 10 o'clock yesterday morning on the 15-minute candlestick. 9, 8. Excuse me. I always had a little bit of a cough lately. I'm sorry for that. And that's the close. I mean, that's a pretty bullish candlestick right there as far as volume and price is concerned. But I mean, we're still below this trend line and above this one, so we'll see what it wants to do. All right. Technically, it has not made a higher high yet. It's made a lower high on that close. So it's just something to look at. We're going to go over cryptocurrencies right now. There are a lot of people who think cryptocurrencies are a scam, or they are not tradable, or they are not real, or that they're rigged. What's odd about cryptocurrencies is, before cryptocurrencies came along, every bad thing people said about cryptocurrencies they used to say about Forex, and now Forex is a nice beacon of honesty and integrity compared to cryptocurrencies. Um, is there some truth to that? I think so, especially 2 nights ago. I was trading. I had a couple private clients that I was with on the horn with because they were concerned about this is the Bitcoin dollar, so this is Bitcoin. This 45-degree trend line here is the most important line on the screen. And these arcs represent areas of initially resistance and then support. And really how these lines operate, these arcs operate, it's like a tide that's pushing price away from it. You know, the longer time goes on, the less that price wants to approach that arc. It wants to move farther away from it. And so the closer we get to this arc, which has been operating as a nice resistance area so far, you know, that weakens as time goes on. So, you know, we'll have to see what happens. But when price broke the 45, you know, we did have sustained momentum to the downside here. Now, I want to take a look here. This right here, if you can see this candlestick. I've had this arc here for quite some time. Let's see. I believe I have evidence of such, so that if you're here for the first time and haven't seen that, or if this is probably the first time I ever showed this one to y'all, just ask for your patience while I locate this. Was that 8th of December? I suppose that would work. Okay, yeah, this is from the 8th of December. I guess I didn't take a screenshot. I did a TradingView link. Well, you can see here, this is the 8th of December. This is the kind of zoomed in Bitcoin pair with the Gantt square is in here. I took that off the screen because it's way too noisy and the square is way too compressed. But otherwise, the arcs are right there. And if we look at the 8th of December, was that the 8th of December? Wait a minute. I'm looking at a different chart here. It's 8th of December. Why is it? Doesn't seem right. Is it? Well, anyways, just looking at this here. That might have been an old. I don't know why that is doing that. Okay. Well, we had this huge break here, and so when this happened, I was trading this at the time. This was at like 5 o'clock at night, around there. For whatever reason, Bitcoin just like went from 1,750 down to 14,000, just like really fast. And then like a couple minutes later, we got the announcement that Bitcoin Cash was going to be on Coinbase, and Coinbase is one of the popular wallets. And it was like everybody exited these Bitcoin positions to put it in Bitcoin Cash, but a lot of it happened before there was an announcement. And then we had supported buying. What is so typical of Bitcoin is that if I put the volume back on here, and here's the point, is that this inner arc has been respected this as support, and so price was rejected going further. But what is so common with Bitcoin is really that no matter how low it goes, whenever there's a dip, we can look at the daily here. Whenever there's a dip in price, it's met with responsive buying. So we have a dip volume here, dip volume there, dip volume there, dip buying volume here, ditto and ditto. But you'll notice as we get closer and closer to Christmas, we do have, a detrending volume. You'll find that everywhere in every market right now. But going back to the hourly, we are kind of in this little bit of a range trade, and Bitcoin is, it's been kind of banking around the 16,666 line here, and you might even say we're forming a head and shoulders pattern here, but we'll see what happens as we move farther in time here. We're getting closer to the edge, and we'll just have to see what happens. I have been feeling that Bitcoin is it's going to go higher. I have just been banking on it going higher. I don't see any reason why it should collapse totally. However, Bitcoin has lost 80% of its value 5 times before, and it has rallied and recovered 5 times. It's 4 or 5 times, I don't remember. So in the scheme of what is normal, this is going to sound so weird, but an 80% loss of value in Bitcoin is not uncommon. You just have to have a stomach for it. And not a lot of people, yours included here, has a lot of stomach for something that falls 80%. Anyways, this, it's dropping here. It's been having some hard times holding above the 16.5 zone. We'll see how low it wants to go. If we're going to use the breakout at 9,000 as a where are we at here? We'll use this swing low as a Fibonacci retracement. I'm not a huge fan of them. I know I've said that before, but if we look at where it might touch first before we have some more movement up, the 0.38 zone is like at the 15,700 area maybe, or even as low as 14,500. It's a 50% retracement. There's just a lot of buying in opportunities the lower this gets, and the lower it goes, the more scared you have buyers up here who are not liking that, so it fuels energy to the downside. If we look at the range here, go to price range. Yeah, price range. From here to here, we have a 24% drop, 4,291. Price drop. Mostly looking for percentage here, but we're kind of in that range of a normal move down. 25% loss is not unheard of. That's wild, isn't it? So whereas you look at like Forex average moves like that, you get between 3 and 8% in the euro. So yeah, it's kind of not a bad structure, but you can bet your dollars that when we break this arc and this period of time, that Bitcoin should have some strong momentum to the top side. All right. The other major coin we have is Ethereum. Now, Ethereum is just another cryptocurrency. If you're not familiar with cryptocurrencies, you probably may have heard of Ethereum, may have not heard of Ethereum. You probably have only heard of Bitcoin, but Ethereum is the second most important coin. It's the second highest market cap. Its technology is more advanced. Like Bitcoin is it's just not it's not efficient anymore as far as how its blockchain works. It's got scalability issues. It's been a huge issue. Without going into all the history of that, there's a lot of politics involved with cryptocurrencies. So when Bitcoin was getting to the point where it was getting kind of bottlenecked by its own limitations, there was basically a civil war in the middle of the year here of 2017, where you had the people who, the miners, the people who kind of operate the most aggregate power for processing the transactions, the people who mine and the mining companies, they wanted to do oh man, I'm going to get slaughtered if I get this wrong, but they wanted to do a hard fork, which means that all the data from Bitcoin is then moved into a separate coin that continues, but Bitcoin doesn't recognize anything else. That was Bitcoin Cash. So Bitcoin Cash is just it's like a mirror of Bitcoin, but then the software is more advanced. It's like a non-upgradable software update. It can't go backwards. It can only go forwards. Then what some of the Bitcoin founders, the first people, the original inventors, they were opposed to that. They felt that was against the spirit of Satoshi Nakamoto, who is the person or persons who created Bitcoin. They did a soft fork and used Segwit 2 is kind of oh man, I'm getting all these terms mixed up. But anyways, I'm not going to bore you with that. Let's look at the price action. Nice thing about Ethereum lately is that when Bitcoin is experiencing weakness, we're getting a lot more support in Ethereum. And it used to be whenever Bitcoin is experiencing weakness, everything was weak. But now we're getting some, breakaway correlation, good evidence of how much more that is now. This is the Ethereum Bitcoin pair. So this is just like a Forex pair where, when Ethereum, if Bitcoin is doing well, then this pair is doing poorly. Like whenever Bitcoin has been doing really well, Ethereum should be doing poorly, and that's how this chart works. And then we have vice versa, where if Ethereum is doing great, Bitcoin's not doing so well, we should get some rallies in price. Okay, which we do observe is happening here. All right, we're getting kind of close to a important point in this pair, but this, I spent a lot of time creating this chart and getting the lattice structure and the nature of it, and then I found out I really don't want to trade this, because why would I do that when I can just trade the majors against each other? So Ethereum, its all-time high is not very far away. It was at 856. No, that's not right. 875. And just when prices get to these like regions where they're close to like a factor of 10, like 1,000, they want to go there. Sometimes they have to coil up to get there, but that's pretty normal. But Ethereum's it's a healthy mover. I like the chart much better. Ethereum's chart is much cleaner. It has more appropriate structure. Bitcoin is just, this thing is its own beast. I mean, it is a wild ride, and it is not sometimes a fun ride. But Bitcoin is a monster. And then the other kind of major is Litecoin. I think Litecoin is third in market cap, but I don't know if that is true anymore. Crypto market cap. Just a couple weeks ago, the entire market cap for cryptocurrencies was like 450 billion, and within a couple of weeks we have the total market cap now is 632 billion. And Bitcoin's dominance used to be at 53%, but that is going down as these other pairs get really more expensive. Technically in market cap, Litecoin, rather Bitcoin is second in market cap, followed by Ripple, and then Litecoin. I only say Litecoin is the third important because Coinbase has that on there. You can only trade, or Bitcoin will only allow you to deposit in Bitcoin, Ethereum, Bitcoin Cash, or Litecoin. Maybe Ripple someday. But oh yeah, look at the euro. It's falling down a little bit there. Litecoin. Yesterday, the founder. It came out yesterday, the day before, that the founder of Litecoin has liquidated all of his Litecoin. He doesn't have it anymore. Now that didn't have such a huge effect on the Litecoin here. It's kind of just trading a little flat here. Got a little stalled out at the 350, 370 area. And the reasons the guy got out of his Litecoin trade is he felt that there was conflict of interest because he didn't feel like he could post anything about Litecoin without being accused of influencing the price. There's some truth there, I guess, but he's still working on the Litecoin, so who knows. Ripple is a bit of a monster. I felt real bad. I told a group of clients during the whole Bitcoin smash that I told them to exit out of their Ripple, and see, as a trader, you need to own up to your mistakes, the ones that you make for yourself and the ones that you make for others. Thankfully they got back in, but I felt pretty bad for them and me because I also got out of my Ripple trade. I was in at 77, and then it just kind of went down a lot. It was approaching this line, and it was, I didn't like it. I don't know. But you win some, you lose some, you miss runs, you hit runs. This isn't probably the final move. There'll be a lot more movement, but finally Ripple is worth $1. And so, that's a really good level to look at, because $1 psychologically, that's a really important level. That you can almost treat that as the new zero line. So yeah, just kind of keep your eyes on that. There's a lot of fundamentals behind a lot of these coins. There are so many cryptocurrencies out there. Most of them, 99% of them, are not anything good. There are diamonds in the rough somewhere, though. But that you have to do a lot of research to figure out which coins are going to have substance, which coins have some type of deliverable, what coins are going to have some type of benefit. It's almost one of those things where you go to if you go to the website of the coin, it's one of those things where you can almost judge a book by its cover. If the site doesn't look professional, or if it's difficult to, if it looks too, you know what the difference between a professional looking project or product is versus a unprofessional one. And there's just a lot of coins that are really bad, that are getting pumped up a lot, because this is one of those rising waters float all boats. So even the bad coins get a little bit of a pump here. Also, ICOs, if you're unfamiliar with those, ICOs are like IPOs. Instead of initial public offerings, there's initial coin offerings. Initial coin offerings are really no different. It's just that you don't have to follow any rules. And there's a lot of ICOs where the founders start the coin, it trades high, and then they just dump all their coins. You can't do that with an IPO. You know, you're restricted from selling your stock for a while. That'd be cool if that was with ICOs, because I wonder how many people who start and fund and back their ICOs are going to stand behind their coins if they know that they can't just sell them when it gets pumped up so high. So, you know, NEO is another coin that is pretty popular. I don't like it. I don't like the structure. I don't like the price action on it at all. ADA is an altcoin that has gotten more and more important over the last few weeks, and it's fundamentally, I did my own personal research on this, and this is the only coin that has a lot of substance behind it. It's backed by the University of Edinburgh, Japan, bunch of universities here. They're releasing I'm not advocating anybody buy these. I'm just kind of pointing out my research for y'all. But they're coming out with ATMs in Japan of ADA. That's called Cardano is the name of the coin, the Cardano coin. ADA or ADA is how people say it sometimes. But it's a interesting coin that's had a lot of movement. You know, there's just so many coins. You know, currency or crypto market, coinmarketcap.com gives you a kind of a breakdown of the total market cap. You know, 277 billion is Bitcoin's market cap. You know, you can look at the volume, last 24-hour volume, who's had the most. See a lot of the big guys are up there. Circulating supply. Again, you know, cryptocurrencies are really not like currencies. They're more like commodities because they do have a fixed supply. They have a limited supply that's not like fiat currency. So keep that in mind. Oh, look at that. Euro has a nice little drop below that long-term trend line and below all that trend there. That's pretty bearish signal. It's kind of erased all of yesterday's gains. Which, okay, I'm going to bring this up again. Moon phases. All right. Let's go to the daily. Okay, moon phases. Let me do a cleaner chart so you can see moon phases. And back to the daily. Get rid of you. When I've talked about moon phases and how the market tops are generally near the swing highs, short-term highs, long-term highs are generally near new moons, and that full moons are usually the opposite. They're near market lows. If you've noticed, if you've ever done this yourself, it's not right on the day. Oftentimes you have to wait in the middle of the week for those signals to show up, like the actual extreme low in a full moon is sometimes in the middle. You have to wait for the start of the second week of the moon. You know, it's just not, you know, right over here you have that top that finally showed up. It's generally not always the beginning of the day unless the price structure supports it. You have to wait sometimes. Now, when I'm looking at just the daily chart here, and I'm looking at this is you know, Monday was our new moon, and we're, you know, as we're getting closer to Friday, and the next Monday's the you know, the new beginning of the new week. It's halfway in between this moon phase. Then, you know, I can see still having a short bias. I still have a short bias based on that. I want to see actually it kind of return to 1900, but if I don't get that, I'm comfortable with the break of 18. Okay, I'm going back to the coins here though. Um, if you like trading Forex, I I feel like you would like trading cryptocurrencies. Cryptocurrencies are harder to trade in that the setup is not as easy. Um, if you want to trade, like, all right, so I have to go to Coinbase, sign up, deposit money, and then when I buy, when I swap my Bitcoin out, when I trade my US dollars for Bitcoin, then the Bitcoin show up, and then I could certainly trade it off, Bitcoin for dollars there. But usually you go to a exchange like Bittrex is probably the most. It's this one. They're both based in the U.S. If you're concerned about going to exchanges overseas or whatever, you know, uh, Bittrex is fantastic. You log in and they have all the currencies here. I want to show you the. Well, you can kind of go visit it yourself, but they have like all the altcoins with the Bitcoin pair, all the altcoins with an Ethereum pair, all the altcoins with I don't do they have I don't think they have Litecoin, but there are thousands and thousands of options here. Um, you know, this is the most exhaustive watch list I've ever had for anything, and I like to keep my eye on a lot of these to see where they're going and see which ones are lagging behind on a rally, because sometimes you can catch them on the way up. Going on into our time together, I will be spending time on cryptocurrencies as well, not just Forex. And that, the Forex pairs are going to be still the focus, but because cryptocurrencies are a lot like Forex, they're great to trade in tandem. So let's just take a look at our or Forex pairs. I'm sorry, I can't talk. Break down to the hourly here. Let's see, we have the euro has broken down there. It is kind of finding support at that 1851 line. We'll see if that holds. It doesn't appear like it will, but if we look at the 8-hour chart here, we're still kind of up in that area. So we may get this may be the beginning of another, move to the south. So keep your eye on that. The dollar yen still, really we want to see if it can break the 1360 area, or maybe even, get above 1375, and there's pretty clear skies over to 114. Euro pound, what are you doing on the hourly here? Euro pound is kind of stuck in its little range here. Maybe a little consolidation before the next move up. Pound yen falling. Euro yen falling. Aussie dollar yen. And look at gold. Gold. That's not a good sign if you're long. A lot of these buyers here are going to be under pressure. They are already under pressure, but as we start pushing lower here, it's going to be a painful situation for longs who want to go long right at this point. So You know what? I know I've been with you for a little bit longer than normal here, but it'll probably be a little bit longer than normal because we're going to be looking at two different sectors or instruments. And I hope you guys have a great rest of your week. We'll visit Friday, and then we won't probably see each other until Tuesday, the 26th. Um, so trade well, trade smart. Again, this is one of the worst times of the year to trade. Kind of spend it for education. Spend some time learning and reading, or go over some past trades and figure out uh, where you failed, and admit to the failure. Failure is a great coach. It's the best coach. Um, you learn from the things you do wrong, and so don't avoid them. That's one of the bad things about traders is we hate to relive our losses, but we have to do it in order to learn to be better traders, and it's very essential that you do that. So anyways, I hope you guys have a good rest of your day, and we'll see you tomorrow morning. Bye bye.